Checky, check, mic, check. Good morning, good afternoon, good evening, troops, wherever you are in the world, and welcome to the channel, Mark. That's me, my words, where we follow trading, traveling, and training. So you join me live. Market's closed. We are doing a quick summary of today's action with GME and AMC and the broader market, and then we're going to jump over to the earnings call for AMC. If you are here, say hello in the chat. I don't bite. Before you do, smash that like button for me. Help me grow the channel. Something about algorithms. No idea. But it all helps apparently. So how are we all doing? What have we been doing today? I have been parenting. I've been listening to the House Committee hearing in the background, trying not to fall asleep. And I've been kind of watching the charts wherever I can. So for those of you that are new to the channel, I try to live stream as often as possible. It is a little bit hit and miss, unfortunately, because of my other responsibilities outside of YouTube, you know. So we do have I do have a normal life, and I've got things to crack on with. Anyway, it's great to have you here. I can see a few people joining, so welcome. Feel free to introduce yourselves if you haven't already. There's a link to my Discord in the description. Feel free to jump in there as well. Very, very friendly bunch. We just have a general chit chat, talk about stocks, talk about what we're all up to, and this, that, and the other from all over the world. So feel free to jump in there. It's free to join, and you'd be most welcome. So, Mikhail, how are you doing, sir? Nice to see you in the chat. Greetings to you too. Right then, let me crack on with GME because I am conscious of time and I don't want to miss the start of the earnings call for AMC. So GME today finishing just under 1% in the green, actually, after a bit of a roller coaster this morning. It was attacked pretty much right from the beginning. A low of the day, 155.60. So if you were looking to get in today, I mean, generally, if you're looking to get into any of these two tickers at the moment, if you watch the early morning, you always tend to see a little bit of a sell-off. So that is a good point of entry. And if you got in today at the low of 155, congratulations. We had a high of 164.72, closing at 161.01 according to Webull, and currently slightly down in the after hours, but we don't take much notice of that here. Very, very minimal access to that kind of trading. So take that with a pinch of salt. Volume today, again, another extremely low volume day, below 3 million. Just slightly higher than yesterday, which was around 2.7 million once they'd added the 1 million back on. So there you go. So that's it really, and what I just want to do is what I do regularly on this channel is just take a wider view at this, because on its own it doesn't look very pretty, but if we put it onto, let's put it on the 2-hour chart and see you can see here I've got the wedge marked up, but you can see, I mean, we're down here, so we have this channel 160 to 180, which generally, we've been either hovering slightly above it or slightly below it, or operating in it for, since March time really. So on average, that's the channel that we're in. Okay, we're testing it again. We're at the bottom edge. So if I just zoom in here, you can see that we're on that support line of 160, and we're also on we're at the point of the wedge. We're slightly outside of it, but these lines, they're an art. They're not a science. There may be a little bit of movement either way, but we're just coming to the point of the wedge now. So interesting times, and we'll see which way it goes. No predictions here, no price predictions, no date predictions. just factual looking at the charts and seeing what's happening. So take that as a positive. We're still above that 160 area, and actually sitting quite pretty. You can see, if you're watching the chart during the day, you can actually see just how little price movement, how little volume, moves the price quite considerably. And when I say quite considerably, I'm talking at the moment like $1 or $2. You can see a few shares moving the price 80 cents, 90 cents, $1.50, a couple of dollars. So it just gives you that indication that when we do start seeing that volume again, boy, are we in for some ride. So it's a patience game. Again, we are passengers. Together as a collective, we are strong. But there are bigger forces at work than you or I, and that's just the reality of the situation. So if you are in, welcome. For transparency, I do have positions in GME and AMC. So I've got 2 tickets to the moon. As long as one gets me there, I'm happy. If they both take me there, I'm on a super boost. So I know I'm not alone on that, and I'm just enjoying the journey. I've put in what I can afford to put in. I can't afford to buy any more now. My positions are there and they are locked and loaded, and we wait for the launch, and in the meantime, we are trading as we are trading with not very much volume and very little price action. So that's it on GME. If you do have any questions, please feel free to put them in the chat, and I'll try to answer them as best I can. Over to AMC quickly. Again, let me put this on the daily, and then we can, the 1 minute daily chart, and then we'll go and have a look at the wider view. But again, a low volume day really when you look at the average, 38 million. Finishing slightly down today, 17 cents, $9 at the close. Currently the same after hours. But the big news today is earnings. So we will be dropping over to the webcast shortly. I've just seen it pop up on the internet that they have missed earnings per share. The estimate was minus $1.26 and the actual was minus $1.42 for a 12.5% ish differential. But that's an increase of last year on year they were down. This time last year they were minus $2.22. So some improvement there. But listen, it's an analyst consensus. Okay, so don't take it as completely negative. What I do expect this to be used as propaganda, shall we say, to try and drive that price even lower. I think that's what's going to come. So don't be surprised if you see either in after hours, pre-market, or even at the open tomorrow, some more downward pressure on the price. But I'm interested to hear what the CEO has got to say, to be honest. It seems like it's going to be a very, very interesting earnings call. So that's the chart. I mean, Mikhail's just just commenting there how it looks like a barcode. It does, and that's just evidence there of it's not natural trading. That's just algorithms and computer systems going to me to you, to me to you. I'll send you one, you send me two, you send me two, I'll send you one, sort of thing. So, there you go. Bobby's in. Bobby, good to see you back, mate. Not seen you around for a few days. How have you been, sir? All good, I hope. David's in. How are you doing, buddy? GME compressed like a spring. It really is, mate. It really is. So, they're primed. They're both primed to go. And I was talking in the Discord earlier that I think GME's got a couple of near-term catalysts. They've got, obviously, they're looking for a new CEO, so that news is going to be coming out, and then they've got their shareholder meeting as well, which now that AMC have pushed theirs back a little bit, You know, that the GME shareholder meeting comes first. So a couple of catalysts, they might be adding more to the team, you know, that sort of thing. So I think GME is a little bit more primed to go first. That's just my opinion. But I think they're both primed to go, you know. So, and I'm wondering what AMC are up to. You know, they cancel the 500 million dilution, and then they change the date of the postpone the shareholder meeting. So it makes me wonder what's going on behind the scenes. I've seen some theories online, some which I agree with. I think it's been some kind of strategic move. You know, I was never concerned about the 500 million shares anyway, because it was never going to be pumped into the market straight away. So, but I've seen theories that's been, you know, it's been a bear trap, and he's put AMC have put that on the table to try and, you know, weed out some more shorts. So, and it looks like, you know, and then all of a sudden, they think, oh great, we're going to get access to potentially 500 million more shares. You know, they short it even harder because they think that those shares are going to be able to get those to cover. And then all of a sudden, that's gone. That's off the table. And there are 43 million more shares, but, you know, will they issue them? They're out. They're out with the nominated brokers. So, you know, the three banks that have been given some. So we'll see when they end up in the market. It wouldn't surprise me if they do something similar to what GME did, and we trade sideways for a while, and then all of a sudden they make an announcement saying we've raised, you know, I don't know, 430 million at $10 a share or $9 a share, whatever it is, you know, and that's it. There's no more shares out there, and it's retail that have bought them up at these prices. So that's just my thoughts on the two tickers. I don't know what you guys are thinking, whether you are, you know, excited, nervous, you know, pop it in the chat. Let's have a chat about it. I'd like to get to know you all. I can see a few people watching, so, you know, welcome. And that's my opinion. So I'll just have a quick look at the bigger picture on AMC, and there's a few areas that I've got marked up here. The one that we're in at the moment is the $9 to $9.16 area. I've had that marked up as a channel before. You can see, oh man, where are we gone? AMC. You can see here that we've got some support here. You know, it's tested it. Okay, it broke there. It's tested it. You know, $9, tested it again. So it's not a disaster by any stretch of the imagination. And when you look at where we've come from, you know, and if you look at it on the bigger picture, where are we? You know, we're trading quite nicely actually. You know, we're not dropping below. So, you know, I'm certainly not worried. We've still got, you know, a slight ascending level there. If I draw that on, trend line. There you go, you can see that. So, you know, higher lows. Again, even at today's action, we are on higher lows. So, not worried at all. I'm just going to try and get the webcast up. Give me a second. I've got to sign in. We've got some nice music. Right, so I will switch the display now. Look at that, seamless. I should have been a producer. No, I've only just started learning how to use all of this charting, this streaming software and stuff. So, you know, it's all new to me. But I think you can all see that. And what I'll do, is there a countdown timer on? Still got the music playing. So we'll keep going back. It's scheduled to start now. I'll turn that down. And then I'll be able to hear them when they start the call. And we can jump on there. So how is everybody? What's everybody been doing today? Everyone had a good day? It's been beautiful weather here today in Europe. Where's everybody from? So I'm sat in the Czech Republic. And it's been beautiful today. It actually feels like summer is coming. The sun was out. It was beautiful. Nice breeze. And then last night, I was sat watching the football. Anybody interested in football? I'm a Chelsea fan, so we made it through to the Champions League final last night. We beat Real Madrid 2-0, 3-1 on aggregate. So we've got a cup final next weekend, the English Cup final against Leicester City, and then we've got the European Cup final against Manchester City. So that's in Istanbul in Turkey. So I'm looking forward to that. A couple of good weeks of football coming up. HMN, hey sir, cheers from Canada. Welcome. How are you doing over there? What time is it over there? About 5 o'clock in the afternoon. I don't know, it's so big, Canada and America. You have different time zones in the country, don't you?
Greetings and welcome.
Here we go.
Entertainment first quarter 2021 earnings conference call. During the presentation, all participants will be in a listen-only mode. Afterwards,
guys, can you hear it? Give me a thumbs up if you can hear it.
If you have a question, please press the 1 followed by the 4 on your telephone. Should you require operator assistance at any time, please press *0. As a reminder, this call is being recorded today, Thursday, May 6, 2021. I'd now like to turn the call over to John Merriweather, Vice President, Investor Relations.
Thank you. Good afternoon. I'd like to welcome everyone to AMC's first quarter 2021 earnings webcast. With me this afternoon is Adam Aron, our President and Chief Executive Officer, and Sean Goodman, our Chief Financial Officer. Before I turn the webcast over to Adam, let me remind everyone that some of the comments made by management today during this webcast may contain forward-looking statements that are based on management's current expectations. Numerous risks, uncertainties, and other factors may cause actual results to differ materially from those that might be expressed today. Many of these risks and uncertainties are discussed in our most recent public filings, including our most recently filed 10-Q. Several of the factors that will determine the company's future results are beyond the ability of the company to control or predict. In light of the uncertainties inherent in any forward-looking statements, listeners are cautioned to not place undue reliance on these statements. The company undertakes no obligation to revise or update any forward-looking statements, whether as a result of new information or future events. On this webcast, we may reference measures such as adjusted EBITDA, free cash flow, adjusted free cash flow, and constant currency, among others, which are non-GAAP financial measures. For a full reconciliation of our non-GAAP measures to GAAP results, please see our earnings release posted in the Investor Relations section of our website earlier today. After our prepared remarks, there will be a question and answer session. This afternoon's webcast is being recorded, and a replay will be available in the Investor Relations section of our website at amctheaters.com later today.
I'll link it, guys, in the description after.
John, and good afternoon, everyone. Thank you for joining us today. For the last year, I've started all our AMC earnings webcasts and all our internal employee meetings by expressing my sincere wishes that you and your families, along with your colleagues and friends, all have been and are now still in good health in these challenging COVID times. Today is no different. I so do hope that you all are well. But with 250 million vaccination doses already in the arm in the United States, and more than 1.2 billion doses of the vaccine having been administered globally, and given that millions of more vaccine injections are taking place every single day, both at home and abroad, this just may be the last time, or close to the last time, that we feel the need to do a preamble on these calls about your health. Isn't that a glorious thing to contemplate? I watch those vaccination statistics closely all the time because, let's say what it is, vaccination is our way out of all of this. Count me among the many who continue to marvel, and by the way, that's little m marvel, as in being amazed, not capital M Marvel, through which Disney is going to be releasing some extraordinary movies theatrically this year. Anyway, I truly marvel that every one of us talking or listening today on this webcast are now in our 14th or 15th month of living through this real-life horror show repeat of the Spanish flu epidemic of 1918 and 1919. I doubt that anyone on this call really expected that ever in our lifetimes would we have to deal with something this bad, which is so disruptive to what we think of as normal living, and to do that for so long. Before I leave the vaccination issue, though, which is so critical to AMC's recovery for obvious reasons, I said a few months back that Albert Bourla, the CEO of Pfizer, might just be the most important human in directing the comeback and the immediate future of the entire cinema industry. I meant that then, and I mean that still today, although he may have to share some credit with Moderna and others in pharma, as well as with those in the Trump administration who made a daring commitment to Operation Warp Speed. But today, we also are so incredibly grateful to the new Biden administration for getting the vaccine rolled out and in arm to so many Americans so quickly. The U.S. is conquering a mind-numbing logistical challenge, and the country doing so is a major reason why I am truly and absolutely optimistic, hopeful, and confident in AMC's recovery. Turning more directly to AMC, as I look back on the odyssey of the past year for AMC, there's just no other way to say it than this. It is simply and utterly astonishing what AMC has accomplished since March of 2020. Astonishing. It should take your breath away. It certainly did mine. And, you know, I say that not trying to have any sense of braggadocio. It's just the truth. And even as we say that, when we look back at what we've accomplished in such challenging times, we're not wearing rose-colored glasses. We're not sugarcoating our reality. We know that AMC is losing money today, not making money today. And we know, too, and are so very well aware, that there is enormous work ahead for us to steer AMC through to a recovery. But what gives us the confidence that recovery is finally in our reach, and that going forward we will maneuver our way to get AMC through these waters, is this. Just look at what this management team already has pulled off in these unparalleled times. At AMC, we were within months or weeks of running out of cash 5 different times between April of 2020 and January of 21. There are a lot of smart people on this call, and many of you were certain that AMC would collapse. Why? To use a billiards metaphor, because to succeed, we would have had to run the table about 10 times in a row. We would have had to execute flawlessly on so many different dimensions. But that's the thing here. At AMC, that's precisely what we did. My goodness, the strength and circumstances of AMC are so much radically different and radically improved on May 6th than they were just months ago on November 6th or December 6th or on January 6th. 6 months ago, in this very quarterly earnings call forum, I was quoting Winston Churchill's famous "We will fight on the beaches" speech to discuss the wartime mentality that we had at AMC to successfully tackle our seemingly to many insurmountable challenges. Well, we know with the benefit of hindsight that Sir Winston won his war, and we have every confidence in looking ahead that AMC will win ours. We certainly are well on our way. Here is where we've ended up coming out of Q1 and moving into Q2 in calendar year 2021. As of March 31, 2021, we are strong. Almost all of our U.S. theaters are now open. And ever so importantly, our theaters in New York and Los Angeles are open, where in both markets, AMC is the #1 player and which together represent about a third of our total U.S. business activity. And our market share in the United States has soared, increasing by about 25% compared to pre-pandemic levels. AMC's U.S. market share was about 26, 27% a year back. Recently, we've enjoyed a share that is more around the 33% level. We've taken share from those who stayed closed, or those who've gone bankrupt, or those whose marketing prowess is not as imaginative as that of AMC, or from those whose theaters are not as nice as ours, given our substantial reinvestment in them over the past many years. And even as others finally reopen, we believe we will permanently keep some, not all, but some of that increased market share that we've been capturing of late, now that more and more people are discovering and experiencing AMC for themselves firsthand. Our Middle Eastern theaters, too, are all open. Our theaters in Spain and Portugal are open, and much more of our European estate, most notably in the United Kingdom, comes back up in a big way just 2 weeks from now. And crucially, big new titles are starting to come out too, as you know, and people are coming to our theaters again. Our business for the opening of Godzilla vs. Kong was 5 times that of the average first quarter attendance. The Mortal Kombat Demon Slayer weekend 2 weeks ago was our biggest attended weekend at AMC since March of 2020, 13 months ago. Watch TV now, as I did last night. You'll see trailer after trailer before your eyes, starting to create the hype for all the big movies being released to theaters in May, June, July, and beyond. And critically important too, critically important, for AMC at the end of Q1, AMC had more than $1 billion of immediately available liquidity. That is the highest quarter-end liquidity that AMC has ever had in our entire 101-year history. In our new equity raise announced just last week, we had already brought in another $153 million at an average share price of $9.85 per share as of yesterday in just 5 trading days. That number is now $172 million in the door for AMC as of market close today. This takes our total amount raised to approximately $2.9 billion in fresh equity and debt capital over the last year, including the conversion of $600 million of convertible notes into equity at a price of $13.51 per share. And wait to hear this. Literally tomorrow, Friday, May 7th, we will cross the $2 billion mark of cash raised through equity or debt, about 4/5 of that being equity rather than debt, since December 14, 2020, only 5 months ago. $2 billion in the door, boosting our liquidity since December 14. And that's in addition to all that we did from a capital perspective between April and November of 2020, which was about another $2 billion in addition, as spelled out in more detail in our press release today. Taking step after step, this was the AMC to-do list over the past year. Closing theaters and reopening them, closing them again and reopening them again. Gut-wrenchingly having to furlough our entire U.S. workforce, and then bringing our workforce back and dealing with all the extremely important and sensitive issues associated with all that. Designing our AMC Safe and Clean protocols with Clorox and Harvard School of Public Health faculty at our side, joined at the hip with us, to prove that we could reopen responsibly. Navigating with studios, both with carrot and stick, in defending theatrical exhibition and defending AMC, but also understanding and accommodating their desire to creatively address windows and simultaneously beef up their streaming platforms. Prepare for hyper-aggressive and innovative marketing activity when new major titles come to our theater in quantity, as they are starting to do now. Professionally handle a change of control from Wanda, who was a terrific partner for us for many years and who remains still our single largest shareholder, to a shareholder base primarily individual shareholders, about 3 million strong, most of whom live in North America and Europe. And above all else, build up liquidity, bolster cash, cut spending, defer obligations, renegotiate theater leases from our landlord community, who I might tangentially add, heroically really had our back in 2020, and to whom we are ever so grateful now and will be perpetually grateful to as we return to our former self. But the list continues. We had to raise equity and debt, all the while deleveraging to the tune of some $1.255 billion in debt that was either forgiven by our lenders or converted instead to equity. Why am I sharing all of that with you now today? Well, some of it's new information for many of you, and some of it you already know. But in a simple summary, here's the point that I've been trying to make. When you look at it all as one interwoven tapestry, our dedicated, experienced AMC management team and employees, coupled with the biggest and best collection of theater assets in our industry, both in the U.S. and globally, had enormous challenges to deal with in 2020, and we performed beyond all expectations over the past year. Of course, it's clear that challenges anew are still out there aplenty for AMC to deal with. A recovery in the movie theater industry has not yet started. It's just about to start. You can feel it, you can taste it, you can see it just over the horizon, but it hasn't actually started yet. And literally, no one knows what the pace, fast or slow, of that recovery will be. It's clear to us that there'll be much more flawless execution needed at AMC and by AMC to energize this recovery and to benefit from this recovery. But think about all of this. The passion, the energy, the drive, the creativity, the work ethic, the smarts, and the sheer will that AMC displayed in 2020 to make it through this pandemic. That is precisely what we're going to display again at AMC in 2021 and again in 2022. No resting on recent laurels here. No taking a year sabbatical. No coasting. No mailing it in. We all know this is a what have you done for me lately world. And we will give it our all to make people as impressed with AMC's accomplishments this year in 2021 and next year in 2022 as they were with the strides AMC made in 2020. In November of 1942, 2.5 years before World War II ended in Europe, my favorite Winston Churchill said in yet another of his famous speeches, quote, "Now this is not the end. It's not even the beginning of the end, but it is perhaps
The end of the beginning.
the end of the beginning." It took him another 2.5 years, but Sir Winston won his Titanic fight. Indeed, it's going to take us a while too. But hear me now and write it down and hold us to it. As you think about COVID, its aftermath, and the structural changes in our industry that may come our way, I believe that AMC will win our war too. I'm now going to turn the call over to Sean to update you on where we are financially, and then we're going to head pretty quickly after that to Q&A. Sean?
Thanks, Adam, and thank you to everyone for joining us this afternoon. And I also do hope that you and your families have been keeping safe and well during this time. The COVID-19 crisis has continued to severely impact our business during the first quarter. We ended the quarter with nearly 99% of our U.S. circuit open, but we also contended with a combination of significant capacity limitations, reduced operating hours of our own accord to decrease costs, the sizable number of our theaters that were closed for much of the quarter, the continued closure of the vast majority of our international theaters, and all of this combined with a limited number of new title releases. So not surprisingly, this all significantly impacted our attendance levels for the quarter. The very low attendance levels ultimately make this quarter's financial results of somewhat limited relevance. The data is, of course, for all to see in our press release, so I'm really not going to dig into it in much detail on this call. I'll focus my comments with you this afternoon instead on our prospects looking ahead. But before I do so, though, I do want to mention two first quarter statistics that are particularly encouraging. Compared to the first quarter of 2019, before the onset of COVID, our domestic average ticket prices were up more than 11%, and our domestic food and beverage revenue per patron in our very high-margin food and beverage business was up more than 45%. Clearly, guests returning to our theaters are eager to participate in the full theatrical experience, including enjoyment of our innovative and tasty concession offerings. The key performance indicators that drove these two improved metrics for the quarter benefited from a higher proportion of evening and weekend shows, strategic ticket and food and beverage pricing adjustments, the success of our very popular private theater rental program, and increased usage of our mobile AMC app for both ticket and food and beverage purchases. We used the time period of this pandemic to roll out mobile food and beverage ordering on our smartphone app at basically all of our US AMC and AMC Classic theaters. Our industry-leading smartphone app now makes it ever so easy to conveniently order food and beverage items at the same time as purchasing tickets, with the food and beverage items fully prepared and waiting for our guests either to collect when they arrive at our theaters or delivered to their seats. Similarly, during the height of the pandemic, we dramatically upgraded our mobile IT platforms for our UK guests, the UK being our second largest country territory. Now, moving on from the quarter's results, let's talk more broadly about AMC's overall liquidity, financial position, and prospects ahead. In our press release issued earlier today, we provided a comprehensive list of the decisive actions that we took over the last 13 months to improve our liquidity position for success in 2021 and beyond. These actions included raising $2.95 billion of capital, which includes the conversion of $600 million of convertible debt to equity. That's a price of $13.51 per share. Securing more than $1.2 billion of creditor and landlord concessions, obtaining more than $150 million of assistance from European governments, and generating $80 million from non-strategic asset sales. So as of March 31st, we had $813 million of cash, $29 million of restricted cash, and approximately $212 million available under our revolving credit facility, given that we paid down our revolver balance during the first quarter. This gives us total liquidity on March 31st, 2021 of $1.025 billion. As Adam said earlier, this is the highest amount of quarter-end liquidity that AMC has ever had in our 101-year history. The monthly cash burn in Q1 came out at approximately $120 million per month. Note that this is after normalizing for the impact of capital quarter. Of course, it goes without saying that with all the debt and equity capital that we raised during the quarter, our cash position greatly increased during the quarter, not decreased. As previously announced, last week we launched an at-the-market or ATM program to issue up to 43 million shares to further enhance the financial strength and strategic flexibility of AMC during what continue to be challenging times. As of the close of the market today, in just 6 trading days, we'd sold approximately 17.5 million shares for gross proceeds of approximately $172 million at an average price of $9.77 per share. Needless to say, from a liquidity perspective, it's been a good week for AMC. At the end of the first quarter, we had deferred rent obligations of approximately $470 million. This is up from $450 million at the end of Q4 2020. Repayment terms continue to be an average of 27 months, and although a number of agreements have repayment periods that extend through the remaining lease term, which in some cases is well in excess of 10 years. A reminder that the rent expense shown on the face of the income statement represents our rent obligation for the quarter as opposed to cash rent paid. For the first quarter, actual cash rent paid was approximately $40 million less than what is shown on the face of the income statement. While future rent payments will continue to depend on ongoing discussions with our landlords, we anticipate that our quarterly cash rent payments during the remainder of 2021 will be meaningfully higher than Q1's levels. And also that the cash rent in the second half of 2021 will be higher than the income statement rent, both because attendance levels are expected to increase and we will also be repaying some rent deferred from prior periods. Shifting to capital expenditures, as previously stated, we have continued to limit capital expenditures to minimum maintenance levels, really eliminating all but essential and previously committed CapEx. During the first quarter, our CapEx spend was only $8.2 million, net of landlord contributions. This is $67.4 million lower than the same quarter a year ago. As a reminder, net CapEx for the whole of 2021 is expected to be approximately $100 million. And going forward, our CapEx will ratchet up or down based on the speed of our recovery, and we expect 2022 CapEx to be between $100 and $150 million. These numbers are orders of magnitude lower than the AFC CapEx programs of 2, 3, and 4 years ago. Overall, we're in a solid financial position to continue to withstand COVID-related disruptions to our business and to capitalize on the expected return to more normal attendance levels later in the year. At the same time, we believe that it is important to continue to take strategic actions to further strengthen our balance sheet and enhance our liquidity profile so as to optimally position ourselves for long-term sustainable success in the post-COVID world. With that, I'll now pass the call back over to Adam.
Thanks, Sean. Two very quick points, but important points, before we open it up to your questions. First, on AMC's continuing liquidity. Let's assume that our current 43 million share at the market equity raise continues to go well. Let's also assume that the domestic box office, as a proxy for the industry's overall health, has some semblance of a recovery starting in the second half of 2021. How do we define some semblance of recovery? A domestic box office, meaning the box office for the U.S. and Canada, hitting $5 billion or more in 2021, and a domestic box office of $8 billion or more in 2022. How reasonable is an $8 billion placeholder for 2022? We all have our opinions, some more informed than others, but literally no one knows for sure. After all, 2020 was a disaster, and there are a myriad of predictions as to how quickly a recovery in movie theater ticket sales will occur. Still, reflect on this. Absent a global pandemic, the domestic box office has exceeded $8 billion every year between 2001 and 2019. 19 years in a row. It has exceeded $9 billion every year between 2006 and 2019, 14 years in a row. It has exceeded $10 billion every year between 2009 and 2019, 11 years in a row, and has exceeded $11 billion every year between 2015 and 2019, 5 years in a row. And finally, also assume that everything else more or less works out along the lines of our current expectations. In that scenario, when looking at our liquidity, we can say now that AMC will have materially extended our liquidity runway all the way through the end of 2022. And given our sizable market share, a domestic box office in 2021 above $5 billion, or a domestic box office in 2022 above $8 billion, would put a lot of extra monies into AMC's coffers. Second point, AMC now has an army of passionate, interested individual shareholders, some 3 million strong. The exact number was 3.2 million shareholders on March 11th, the last time we got an investor count. They owned more than 4/5 of our then 450 million outstanding shares as of that March 11th date. Since then, a lot of AMC shares have changed hands. So we actually delayed our annual meeting of shareholders to July 29 with a new record date of June 2. And we'll get an updated count of shares outstanding as of that date, June 2. We'll also get the number of shareholders and their contact information in early June. We did all this in part so that we could give our current investors the opportunity to make their important voices heard. But we already know this well before June 2. These individual investors likely hold a majority of our shares. They own AMC. We work for them. I work for them. So by definition, their interests and passions are important to AMC. Their interests and passions are important to me. Many of you remember the extraordinary and heartwarming 1988 movie, Gorillas in the Mist, nominated for 5 Oscars. Starring Sigourney Weaver, Gorillas in the Mist showcased the extraordinary life story of American primatologist Dian Fossey, who dedicated her life to saving the endangered gorilla species, especially where they commonly reside in Central Africa, mostly in Rwanda, and the Democratic Republic of Congo. With all that support over decades, the gorilla population quintupled, more than quintupled actually, but even so, there are still fewer than 1,100 gorillas alive today in this part of Africa. Saving these beautiful creatures is a noble goal. Many of our investors, too, have embraced Dian Fossey's cause and have raised substantial monies for it. Each year, AMC raises third-party money from our suppliers and others, such that our off-balance sheet charitable foundation, AMC Cares, can provide financial support to worthy causes. I am pleased to announce today that AMC Cares will make a $50,000 cash donation to the Dian Fossey Gorilla Fund, and that I also am pleased to announce today that out of my pocket personally, I will match that AMC Cares donation dollar for dollar, bringing the total contribution from AMC Cares and from me up to $100,000. AMC is going to become one of only 7 platinum sponsors of the Dian Fossey Gorilla Fund, the highest tier of their sponsorships. And I will join its Digit Society, its highest tier of personal donors. The Digit Society, by the way, heralds Digit. Digit was Dian Fossey's favorite gorilla when she was alive. Above and beyond those cash donations, we already have started discussing with the Fossey Fund other ways that AMC can be of help. Within the boundaries, of course, of the law, integrity, and ethics, as well as the exercise of wise judgment on behalf of all stakeholding constituencies, in the free market capitalist system, the shareholder is king. As I said before, the interests of our shareholders become our interests. The passions of our shareholders become our passions too. With that, operator, we're ready to go to Q&A.
Certainly, and thank you very much. If you would like to register a question, please press the 1 followed by the 4 on your telephone. You will...
Guys, unless anybody's got any desire to listen to the questions, I think I'd like to go over some of the details there. So just give me if you're in the chat, if you're happy to continue, just chatting between ourselves, or you want to listen to the questions, just very quickly, C for chat, Q for questions. Let me know. I know there's a few people in there, and I'll do it on the majority. So C for chat, Q for questions. Let me know what you want to do. Oh, Q. Ah, right. Okay, it's one vote each. We got one vote each. Come on, guys, help me out. C or Q? C or Q? Q. Okay, let's go. Let's go back to the questions. No problem. No problem.
Already made the decision, as some of you know, to continue a mandatory mask policy deep into the summer at the very least, maybe beyond that, as we learn more about not the pace of our recovery, but the pace of the nation's recovery from the spread of the COVID-19 vaccine. So I think clearly capacity limitations are going up. That's true in New York, that's true in LA. We intend to be very cautious. I am immensely proud of how much effort AMC put into AMC Safe and Clean. We opened our theaters back in August, and we still have not heard of one documented case of COVID-19 being transmitted guest to guest at our theaters. That's so, and that's such a tribute to our people at our theaters who work so hard to operate their theaters cleanly, operate their theaters responsibly, operate their theaters safely. With this commitment to safety at extraordinary expense, I might add, that AMC has shown since last August, protocols that we started working on last May. We're not about to blow it now by taking unnecessary risks. So we'll follow the science very carefully. We're listening to our Harvard faculty very carefully. It's interesting that the people we've been working with at the School of Public Health were so far ahead of the rest of the country that airborne transmission was the real thing to worry about here rather than fomite touch. And you'll recall back last spring, the whole world was worrying about what you touched. And in fact, we were out buying thousands of MERV 13 air filters for our HVAC systems because we were way out front that in addition to cleaning and sanitizing and wipes and gels and masks and social distancing, boy, we needed high-tech solutions too to make sure that the transmission of the virus through the air was greatly minimized at AMC. So, looking ahead, I'm sure the capacity limits are going to rise all across the country. We all know what President Biden has said. 4th of July is going to be a great weekend in the United States, he says. We know that there were 250 million injections in arm in the United States 48 hours ago. There are more than that today. And there'll be a lot more than that by the end of May and by the end of June. And all this bodes well for taking capacity levels up. But we're only going to do it safely. We think our associates deserve it, and our customers deserve it. The other thing to remember, in our case, we have the opportunity to be so forgiving on capacity limitations because, as you've heard me say before, we sell more movie tickets than anybody in the world, and we only sold 17% of our available seats in 2019. We have so many showtimes where these capacity limitations don't cost us.
Okay, guys, we'll leave them to the Q&A, the analyst Q&A. We'll get more details on that as they come out in the press anyway. But look at the after hours action. Let me just set up my screen so we can pull this one back down. Come on, Mark. There we go. Make that a bit bigger, because I want to look at the after hours. Look at the price going up. Look at that. 15 cents up after hours, 17 cents up, nearly 2% up after hours. So, guys, I don't know about anybody else, but I've literally got goosebumps. Literally, the hairs on the back of my neck are sticking up. Look at this after hours. Come on. I tell you what, for those regular viewers, you know my background. And you know, I've heard some pretty inspirational chats, shall we say, in the past. But that was something else. That was something else. Before we get into that, I just want to go over the key financials, okay? And the two takeaways for me were, they've got over $1 billion in cash, over $1 billion. They've got enough cash to take them through to the end of 2023. If you heard something different, put it in the chat, because I'm just telling you my interpretation of what I've heard. The big one, and I said this, we've been chatting about it in the Discord, and I said this at the start of the stream, that I think they've been probably trickling in the shares into the market like GME did, and they're going to get to a point where they're going to say, that's it, we've issued everything. Bang, 17.5 million of those 43 are already in the market, and guess who's been buying them? We have. I guarantee it. He said 6 days. Let's put the 5-day chart on. This explains the price for me, the price action, because there's all the extra shares been going in. There we go. 1, 2, 3, 4, 5. And look on the trading days. Sideways, 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 sideways. That's it. That, you know, this is, and that again, the GME did exactly the same thing. The short hedge funds now are going to be sat there going, right, okay. And when you think, you know, you don't know who those shares have gone to. They may have gone to us. 17.5 million at an average of 977. Now, if they've gone to an institution, like a big institution, the majority have gone to an institution, they've paid, because they said up until, I think he said, was it end of last week or something? I can't remember what he said, but he said first of all, they've done 15.5 million at 985. So it was 153 million they'd raised, 15.5 million shares at 985. So, and then today at the end of business today, they've upped that to 172 million. So they've issued 17.5 million shares at an average of 977 or thereabouts. So, you know, it's they've done it. They've played the hedge funds, man. I'm telling you, they've played them absolutely fantastic. So we've gone from 10.07, we've lost $1, yeah, and there's almost 17. There's almost 50% of those shares. There's about 40% of those shares already issued. Look at the after hours. Look at this. We're flying. Oh, we're flying. We are flying. Woo-hoo! Wow, look at this. Look at this. 30 cents up after hours already. Them shorts better be covering. And then to top it off, retail own 4/5 of the float. Unbelievable. They're making charitable donations to the Gorilla Fund. Unbelievable. Like, honestly, he's making reference to Churchill. You know, I mean, what a guy, what an absolute guy. What a monster. What a monster. Unbelievable. I can't believe it. So anyway, I'm interested to hear other people's thoughts. But my two big takeaways, like I said, $1 billion in liquidity, just over going forward. They've already started issuing those additional 43 million shares, which everybody knew about anyway. So that will not come to a shock to the market. Everybody knew that that's what they were going to be doing. So, they've raised 2 billion since December the 14th, and 4/5 of that is equity. That's what I understood from that as well. Got concessions worth over $1 billion, on rent and stuff like that. So, made improvements to service offering. I heard the guy talking about, you can order your food and everything when you order your tickets. Unbelievable. Now, I've spoke before about how AMC evolves and changes as a company and what they can do to improve going forward. Because for GME, it's very simple. They're going to transition into becoming a mostly e-commerce company. They'll probably have some physical stores, but you can guarantee they're already closing stores that are, non-earners. They'll be closing those already. So for me, that's GME sorted. I did wonder what AMC could do different. Obviously, the financials are extremely important, and they know that when this squeeze happens, they're going to be able to raise even more money. So obviously they can't say that on the call, but they know that they've got enough money to see them through to the end of next year. And if they've got to raise 5 billion this year, and then if they hit 8 billion next year, that keeps them going even further still. That's without a squeeze, and all that that they can generate from a higher share price. So there you go. It's game on now. Absolutely game on for GME. It's not GameStop. It's game on for GME and AMC. But yeah, look at after hours, and don't forget this is limited access as well. So I think there'll be a lot of people, a lot of retail people who have been sat on the sidelines waiting for this call today to see what their play was going to be. And let's put this into perspective. They missed EPS. They missed earnings per share, the consensus. They were estimated to get minus $1.26, and they got minus $1.42. So, you would expect when you miss EPS on earnings, you'd expect a bit of a dive, but it's going the other way. Go on. We've done it, gang. We haven't. Don't dance yet, Mark. Yeah. Don't get too carried away. But yeah, I think for me that was as positive as any earnings call I've ever heard. Really. What do you guys think? Anti, that was wild. Hodgie, I think AME surpassed GME today on short percent, short interest or short volume, Hodgie. So, I mean, I just can't, like I said, even now I'm getting goosebumps just talking about it, because that was as inspirational as, as you'll get, really. Motivating and inspirational as well. Short volume. Let's have a look. Let me get it up, and if we go to, it might be up, it might not be up. Let's have a look. Here we go. Oh, that's yesterday's. It's not updated yet. Oh, gee, I can't see it. But I'll take your word for it, mate. Ortex. Yeah, I don't have Ortex. I'm thinking about signing up to it, but it depends how the channel goes because it's a subscription service. So, you know, if I get a bit more interest in the channel, then I'm planning to sign up to these sort of things. But yeah, it's you know, it's I can't put it into words. I can't put it into words. I'm expecting tomorrow morning just to be absolutely mental, really. So, you know, that's what it is, guys. An extremely encouraging earnings call. And I think there's going to be some very worried people out there that are shorting this. And I think there's going to be some very pleased people who are holding shares. Me and you lot. How about that then? It's on. It's game on. Game on. So we just sit and wait now. Like I said, we are passengers, but it explains the price action. That's for sure. In my opinion, anyway. I'm not sure if anybody's got anything different to say. You know. Oh, Hodgie, you wait, mate. There'll be nothing. There'll be almost nothing about his speech in the press. It'll all be AMC Mrs. EPS. That's what it'll be. It wouldn't surprise me if there's some out already. Let's have a look. Let me go back to this other screen. Let me see. Let's see what's on here. There's nothing out yet that I can see. Nothing new. I can't see anything new there. So, but you can guarantee it. They'll be all over it. They'll be all over it. It'll be bad news here and bad news there. Well, we can see. We've sat and listened to it. So, you know, maybe a dip in the morning. You know, there'll be an attack. They'll be using it as ammunition. So, all in all, troops, for me, that was absolutely phenomenal. And I'm going to wrap it up there because it's midnight where I am. So, but I wanted to stream. It's not very often I can stream when I'm on, you know, when I'm in possession of my child. So there we go. That's where we are. A fantastic earnings call, and I think you know, we're in for a hell of a ride tomorrow. That's for sure. There'll be some battles. I will be streaming Power Hour tomorrow, so do tune in for that. And you know, I look forward to seeing you all there. It is Friday evening, so if you've got other things to do, you know, feel free. Don't feel obliged. But yeah, absolutely positive. Looking forward to tomorrow. I'll leave you with the chart there. Currently at 925, up 2.78% after hours. So all positive there. So there we go, troops. That is it. That is the end of the stream. And I look forward to seeing you on Power Hour tomorrow. And take care of yourselves. Cheers, troops.